Good evening, traders. Today is Monday, December 26th, 3:08 p.m. Markets are closed today in observance of Christmas holiday. Well, how many of you find it very difficult to interpret chart patterns because they look a lot like a mole or mole tunnels, I should say, right? Can't ever seem to figure it out. Which way is it going? Up, down, sideways? Who knows, right? Well, what if I were to tell you that on the 4-hour candlestick charts, the markets give a tell of a trend change before the change actually happens? Like in the movie Rounders, when KGB's tell is spotted from eating Oreo cookies. Okay? So, let's get right on into it. Did you guys know, for you newer viewers, that as of the October 13th low, that we have been in a rising channel? Here's the channel at the top here. I have some special effects here so it's easy to see. Okay, we've been in that rising channel, and that we kissed the top of that channel as of 12/13, about a week and a half ago. Okay, we have kissed it many times. 1, 2, 3, 4, 5, 6 times. That's at least 6. It's actually more than that, but you can't see it on your screen. And did you also know that for basically ever since 11:10, we have been in this channel, but been going sideways, and that we are technically, as of Friday, still in the channel, albeit at the bottom of the channel. In extended hours on Friday, after the market closed, the markets made its way back into the channel. Okay? Now, what I'm going to show you guys today is how was this channel even determined before the October 13th low? Actually, technically on September 23rd to September 26th, the markets gave a tell that it was going to carve out what is now the top of this channel. Okay? The bottom of the channel is the October 13th wick low. You're going to see that in subsequent slides, but I'm just going to point that out now. All right? So I'm going to get into exactly how the markets gave a tell. And I'm actually going to go back in time. I'm going to go backwards, and then I'm going to end up through today, through this slide that you're looking at right now. I'm going to go backwards and go from July through August, that ascending side, and I'm going to show you the exact same patterns. And you're going to see that, wow, it repeats over and over again, from July to August peak through October low through today. The pattern repeats again and again and again. Okay? And so I'm going to actually give you the net. Basically, you have to draw a best fit line from a descending side of a hump that has divergence. Okay? I have another slide that's going to summarize it for you all at once, but I'm just showing you on the slide what it is right now. Okay? And you're probably wondering, what is this GRGRG? Green, red, green, red, green. That specifically is in reference to a pattern. Green, red, green, red, green. That showed up on Friday, guys. Okay? And now you're wondering, yeah, so what? What's the big deal? Well, I'm going to actually show you a slide on that, but now I'm just going to, for now, just mention it. Just put a sticky note on that. Green, red, green, red, green. Okay? All right. Basically, what we are looking at today is price direction is always a symptom of another process. You should not just follow price direction exclusively. For example, you can't look at something and say, oh, that looks like a head and shoulders or reverse head and shoulders, because, as you know, that those price patterns could be invalidated at the last minute, right? Cup and handle, right? All those price patterns. You cannot just look at the price pattern by itself. It is a part of another process. So the root cause analysis we have to do is, then what is the process? What is the process that drives the price to move the way it does? Okay, well, here's basically what I just summarized on the previous slide. On the 4-hour chart, we're going to go some case examples of this starting July through August in the next slide. Okay, now we're basically going to pick a descending side, not ascending. Okay, you know how we are used to drawing trend lines, right? That just connect points. Like, well, that looks like a trend line right there. But you're gonna see a wholly different way of drawing lines, and that's how I determined the top of that trend line that you saw a few moments ago. Actually, I didn't necessarily draw a trend line. I drew a best fit line. Okay, so here's the summary, basically, on the descending side, and then whatever hump has the MACD bullish divergence is what you choose. But on the reverse, on the bearish side, you're going to draw a best fit line on the ascending side, because the ascending side gives you a hint of what's about to come on the descending or bearish side, right? Bullish is the opposite. The bullish, you need to look at the descending side when it's falling, because it's going to give a hint on the bullish direction that's about to come. Okay, so it's totally different, a totally different perspective than what you're used to, because you're drawing trend line. When you're drawing a trend line, you're drawing it on the same side that it's trending on, right? But the problem with a trend line is you have to actually literally wait however long the market makers want to give you the data point before you can draw a trend line, right? Before you can connect dot A to dot B, right? You don't know. You have to literally wait for the market makers to tell you what that point is. And by that time, actually, you're probably playing right into the market maker's hands, because because if the market makers know you're waiting for that data point, well, then they can just play the market however way they want, right? So a best fit line, the market maker, you are actually anticipating what the market makers are going to do. It's not a trend line, okay? So before we get into it, earlier I got into that, what the heck is this red, green, red, green, red, green, right? So that's what showed up on Friday right here. See that? And I'm going to mention it for now. About a month ago, I did an episode, Big Mover Patterns, on the 4-hour chart, which is what this is. Red, green, right? Red, green. Basically, when you get this pattern, and you're going to see this in the next slide too, that means a big move's coming. When you have alternating patterns, it doesn't have to be green, red, green, red. It could be red, green, red, green. It doesn't matter. You get this pattern, there's a big move coming. And in previous episodes, I've shown this on the VIX as well. You can see it's like, oh yeah, something's coming. Or it's depending on the position of the red, green. If it's on the bottom position, like this right here, see, like where here's the bottom, here's the channel, So we're in a bottom position. That means a big move up is coming. But if you have, for example, green, red, green, we'll just pretend that's red, in the upper position, oh, that means a big move down is coming. Okay? So on Friday, we have green, red, green, red, green from the lower position. That means a big move is coming to the upside. Okay? All right, here we go. This is, on the left-hand side, is a 4-hour chart for NASDAQ IXIC. This is back in the summertime, guys. This is back in, actually, here's the June 16 low right here. Right here. And here, all the way up here, you can't quite see it, is the August, actually, it's just out of view. August 16 high is probably just over, about closer to here. But it doesn't matter, because what I want to show you is right here. Okay? On the right-hand side is S&P futures for the same time frame. Okay, so we're just going to do both of them side-by-side comparison. This is also the 4-hour time frame on S&P futures on the rights. Okay. Now, see, earlier I said green, red, green, red, green. Big move up. Green, red, big move down. Okay. Now, earlier I gave you the data points that you're looking for, the net. You have to pick the MACD hump or notch that gives you, in this case, bullish divergence. See that? That's a higher low than that. This is a lower low, right? This is lower low than that. Okay? So you're taking the descending side. Because remember, this came from this came from the June lows, right? This is the June low. So now we got to think, well, we got to go up, right? So take the descending side of the hump or pivot point that gave you the divergence. So in this case, it's this side right here. You're taking this side. Okay? Specifically, now that you know what side to take, now you know what hump to take, right? It's not every hump. Okay? Here's the descending side. All you got to do is connect the wicks. This wick and that wick. You'd be like, what? Really? Yes. So first of all, you narrow, because there's multiple humps, right? This is not the only hump. There were multiple humps earlier. But this is the hump that gave you the bullish divergence. And you're taking this side of the hump only. You're not taking this side of the hump. You're taking this side of the hump because that is the descending side, because you have bullish divergence. That means you know an uptrend's about to come around. See what I'm saying? You have bullish divergence right here. And therefore, you take the descending side, connect that wick to that wick. Now let me zoom out. That's a best fit line. That for the entire month of July and all the way into the August peak, it respected it. It respected it. In other words, this is the top of the channel in July. Notice it's not a trend line. Trend lines would have been out here. Trend lines would have been out here. And you wouldn't have even known where to even start drawing a trend line until you're like, oh, I guess you gotta, this is your starting point, and then here's another point. I guess I can start drawing from right here. But then by that time, it's too late, right? How long have you waited? You waited until the third week of July to actually get a trend line going. But actually, all along, this is the top of the channel for July into August, for the August peak. This is the top of the channel, equivalent to the channel that I just showed you earlier that we have been in for all of November and December and ever since October 13th. That's the top of that channel. This is what you're looking at, the top of the August channel. Okay? And so, surprisingly, to be able to draw the bottom of the channel, all you got to do is wait a little bit, wait for this wick down, and then draw a parallel line that is parallel to the top of the channel. Okay? That's actually surprisingly how I drew the today's ascending channel, right? Once I figured out, oh, that's the top, then where's the bottom? The October 13th wick low is the bottom. Just like in here, this wick low is the bottom of this channel. See that? And you see how it respected it. It respected it the whole time. Okay? That's NASDAQ. Let's go skip over to SPY. SPY futures, rather. Okay, let's zoom in just so you can see better. All right. Red, green, red, green, red. It was here. Red, green, red, green, red. Boom. Okay? Now, specifically though, I chose this hump because this is the one with MACD bullish divergence, right? This is the one. It's like, oh, that's bullish. Pick the descending side right here. See that? So basically it's this side. This is the side. And I basically took this wick and joined it with, this is tough to see, this wick, joined it with that wick low right here. I'll move my cursor out of the way so you can see, but that's what I joined it to. There aren't a lot of big wicks. You know, there's only 1 and 2, right? But that's how you, this for SPY futures would prove to be the top of the channel. And I'll zoom out in a second so you can see. And guess what? The wick low. Wick low, just like NASDAQ. Wick low is the bottom of the channel. Okay? Let's zoom out. That's July 14th, wick low. How did it do? How did it respect it? Yep, looks good to me there. Went out at the bottom of the channel, but came back up. That kind of looks like today, actually. Remember what happened this past week? Came out to the bottom of the channel. See, okay. Actually, for all of November and December, this is eerily similar to what happened in July, August. You could pretend that this is like November, December right here. And now we came out to the bottom of the channel, came outside of it, and now we're about to come back in it. See what I mean? Uncanny similarities between November, December, and July, August. Rising channel all the same. And here's that the weekly EMA from November and December. I even put exclamation points because it's like, you know, you guys, market makers, I mean. Weekly EMA 50. Weekly SMA 20. Look at that. And look how in July, look how it perfectly starts off from one end of the channel, perfectly to another end of the channel, top of the channel, bottom of the channel, explodes perfectly with perfect precision. See that? Look at that horizontal arrangement. So I would suggest that next time you see a horizontal arrangement, I know I'm going to be looking for it. You see something like this? This is an important zone. For whatever reason the market's determined, it's an important zone. I mean, look at this. Look at this. Look at it here. Let's check this out. This wicked up, boop, touched the top of the channel, which happens to intersect perfectly with the weekly EMA 50 for November, December. See? See what I mean? So that's why I think best fit lines are way better than trend lines. Because trend lines, you're limited to out here. But actually, you could be missing a lot of action inside here. There's a lot more telling things inside the channel than there is outside of the channel. See what I mean? If you'd have been drawing best fit lines, you wouldn't have realized that actually we slipped out of the channel in August. See that? Here, let's see what date. Oh, we'll just call it August 8th, 9th or 10th or so. You wouldn't have realized we actually slipped out of the channel, which to me is a red flag that you're losing momentum. See what I mean? It's a red flag. You're losing momentum. Had you not recognized that that was actually a channel, you're starting to fall out of it. And then not too much later, what happens? August fell. Okay? So, that is what I wanted to mention about that. Now let's go to the peak. Let's go to the peak. So, as you know, okay, now this was bullish before this, right? You took the bullish descending side of the bullish hump, right? The descending side right here. Now you are going to take the ascending side of the bearish hump, which is this hump right here. You don't worry about this one. It's this one you want to worry about. Just like in July, it's this one you want to worry about because this is the bullish hump. This is now the bearish hump. Okay? Let's go straight up and have a look. Here's the bearish hump. Because the ascending side starts to give you clues of what the descending side is going to look like. Specifically, green, red, green, red, green, red, green, red. That wick joins with this wick. That proved to be what? Oops. You'll see it in the next slide. That is the channel low. That is the channel low. See that? See how this, when we started going down in August? See how it respects it? This is it. This wick joined with that wick. Again, there's not a lot of wicks. I mean, there's really only one wick. So it's like, well, that's not too hard to pick. Okay? All right. So let's go to the next slide. 4-hour chart, SPY futures. This is from this out of view. August up way up here. August peak. Since you just saw it, I didn't want to have to show it. Because what's more important is down here is the October 13th low right down here. See that? Right down here, right down here. Okay. All right, so check this out. This screen is pretty loaded with information. Okay, here's the bottom of that channel that I just mentioned in the previous slide. See that? Do you see how it just respects it over? So actually, we fell out of the bottom of the channel. We're like, whoa, that's a significant loss. That's like, had we realized at the time, I didn't at the time, that this was a channel that we were actually falling out of, that's like, ooh, this is not good. So that's what gave rise to this sudden surge to try to get back in the channel. See? You see what I mean? And notice how, look at that, the weekly SMA. That in the previous slide you saw on the ascending side, it was drawing a horizontal pattern from one channel and from the top of the channel to the bottom of the channel. See, look, it's respecting that line horizontally. See that? It's respecting it. Okay. Now, so as a matter of fact, let me go back to the previous slide for a minute. Yeah, I wanted to point out, here's the top, obviously. Here's the bottom. Here's the bottom of the channel. And obviously, here's the top. See that? You just connect the wicks. Connect the wicks. Connect the dots. Connect the dots. See that? Wick, wick. Perfect. I mean, look at that. That's just perfect. Right? Okay, that's just perfect alignment. Perfect alignment with this one, too. See that? It's perfect symmetry. In fact, the ascending channel and the descending channel form a perfect diamond. You see what I mean? That is no accident, guys. That was in the master plan for the market makers all along. That is no accident. Because I didn't draw this up, right? That wasn't my idea. See? There's no accident, guys. They had it. It was predetermined all along. Okay? So, let me zoom out. Let's go back to that one. Okay, so now let's get into this action. Right here. Right here. Here's the descending channel from the October 16th peak, right? This is the this right here is the beginning of the rising ascending channel that we are in today, in November and December, actually is ever since October. Once again, red, green, red, green, red, green. Well, let's see. Red, green, red, green, red, green. When you combine the red, green with the descending channel, and now, okay, at this point, let's see, where are you? Yeah, here we go. Yeah, we've been falling. What's the date here? October 16th. Now it's like September. We'll just call it 24th-ish. About a month and a half. We've been falling. Okay, a month and a half we've been falling. Now, with all of these wicks now, and we're starting to have, yeah, it's starting to try to develop bullish divergence, like right here, right? It's trying to come back up, but it came back down, come back up. But it's trying to. Now, when you look at all these wicks now you got all kinds of data points to potentially start connecting, right? Here's where I suggest just drawing like faint gray, like what I would do, as possible trend lines. Like don't color it in firm bright red or something just yet. Like draw a faint gray line through these data points, and you'll start to like this one. This connects with this, connects with, well, almost that, connects with that. You see what I mean? You can start to draw lines. And there's also a telltale sign that is trying to do something. Let me show you. It's right here. It's right here. This, even though it's falling, see that? It's clearly falling, right? That's a higher low than that. What's up with that? Because in general, that is lower, right? This is lower than that, is lower than that. You're making lower highs, right? You understand that in a downtrend, right? We all agree to that. But what happened here? Doop. See that? And that also happens to also join later. I mean, maybe a week and a half, 2 weeks later, I think. Yeah, a week and a half or so later. See, it's joining that too. It suggests that something's up. Like, why did that make a higher high than the previous multiple days? See that? This is one day. 1, 2, 3. It made a higher high over the last 3 days. Like, that's different. Because for the entire time, it's been, well, except with the exception of this one, right? This is clearly higher than that and that. It's in an overall downtrend that's making lower highs. See what I mean? But now you're a month and a half. All right, check this out. Now you're a month and a half into it, right? Now, from August 16th was the high. Now we're at like September 28th, right? We'll just call it a month and a half right here, down here, right down. That made a higher high a month and a half later. That suggests, there might be something different coming here, okay? Because a few days after that on 10/2, this is September 28th, right? 30 days has September. We'll call it 4 days later. Yeah. 1, 2, yeah. Or something like that. 3 or 4 days later. 10/2 actually was the approximate low. 10/13 was the wick low. That's why I say approximate low. That was the wick low. But when you look at the 10/2 low right here, compared to the 10/13 range, that's about the same, right? See, that's about the same. That's about the same. So what I'm saying is, now you have bullish divergence here. Now you have 1 notch, 2 notch. See what I mean? Now you really need to start looking like, wow, I got all these wicks. Now we got a higher high than the previous 3 days. And now we got this. See what I mean? Now you can really start to... This is before 10/13, guys. Remember, this is the 10/13 low. You're 2 weeks early. That's what I'm saying. You're 2 weeks early. That there's a difference in the trend. Something has changed. Something has changed. You've been falling for a month and a half down here. Clearly, something has changed here. There's an uptrend coming. That's what it is. The 10/13 wick low proved to be the bottom of the channel, but the top of the channel already started, like on September 23rd. Yeah, September 23rd, right around this range. See what I mean? So once again, as you saw in previous examples, this is the descending side, right? This is a descending side that has bullish divergence. Yeah, MACD bullish divergence. Because it's about to signal a trend change to the upside, in which we have been in through today. We're technically still in the channel. Okay? So that is what I want to show you about that. Now that brings us to today's slide. Okay, everything I've been saying still holds true, right? So, okay, so check this out. Here's that big honking mammoth trend. Top of the channel. Here's the bottom of the channel, right? Down here. Okay, so this is a downtrend I have drawn in. This is new. You existing viewers haven't really had a chance to... I've kind of refined it. I drew it in a couple days ago, but then I looked at it again. Now, this is interesting. If this is proven to be the top, which it very well could be the top of this trend. I think it probably is. Then using the defined criteria of, okay, because we have bearish divergence. See this top right here. Here's the top. That's bearish divergence compared to this right here. See that? That is lower than that. So you have bearish divergence, right? Now, so you have to take the descending side. Okay? So actually, so as you guys probably know, this is the 4 hour. This is the MACD 4 hour. You see that? This is a notch that seems to want to flatten out. And now, as you see, it's actually separating from the signal line, right? That's clear. That's bullish. Okay, that's bullish. This notch, and now you have separation, could likely, actually not could, I think it's likely that this notch is stopping this MACD downtrend. It's stopping it. That's the definition of the notch. If you see my previous videos, that's how you stop the downtrend. You create a notch, which is the beginning of an uptrend, technically. Okay? So, what I have therefore done, using the same criteria I've shown you in the previous months, the previous slides, you take the descending side of the MACD bullish divergence hump that we clearly have right here. This is bullish divergence. Because that is a higher low. That's stopping it. That's stopping, because here this is lower than that is lower than that. This is higher than that. That's bullish. Okay? This is higher than that. That's bullish. So you take the descending side of the bullish hump and you start to draw your trend lines. That's what these light gray lines are. Now, see, I'm connecting all the dots now. That's what these light gray lines are. These are potential target points of the market's next move. These are potential. These are potential. 39.60 gap. We left that gap up there. And as you see, the trend lines that I'm drawing, right? Two of them go into that gap. Two of them don't quite go into the gap, are staying in the 390-ish range. Okay? What's going to be interesting, though, is you have the old bottom of the channel going up like this. And now you have, I've drawn in the new top of a channel right here. See that? Connected by this. Actually, I drew the bottom of the channel first. Right here. Right here. Okay? And therefore, then I just drew a parallel line right here as the top of the channel that connects that point right there. What's going to be interesting is if we continue to meander this way, we're going to get wedged. We're going to get wedged between the weekly SMA, bottom of the channel, top of the channel. If we continue to meander, right, in an upwards way. I'd like to see how that ends. Well, that's assuming we rocket up somehow, right? We hit one of these targets, one of these gray lines, targets, and they just fall right on through. That's possible too, right? Depending on how far, how fast we move this week. It depends on how far, how fast we move. If it's fast and furious, I think we're going to fall right back down through that channel. We're going to fall out of it. We're going to fall out of this rising channel, I believe, if it's too far, too fast. If it's too impulsive. But if we're kind of chopping, maybe kind of generally hitting up, you know, we'll see, right? Okay? So that is basically where we're at. today. Hope all of that made sense to you, going back into history and looking at the previous case studies of what has already happened, right? That's how you can really get a handle on, well, okay, well, you showed this pattern again and again and again. Let's see what you're going to do this week, okay? So, and this next slide is the Friday right here. Look at the upper right-hand corner right there. Snuck back into the channel, sneaky dogs. See that? Sneaky, sneaky. You didn't do it during trading day. All you did was give a rising wedge so you can burn those options premiums off, make some money. But you didn't take the 65-minute EMA 50, which is right here. This is the red line right there. You did not take that line until after you closed, and you did it in extended hours. Cheating, cheating. Now, you guys who traded last week, you guys know they cheated because all of last week, all 100% of the big moves that happened last week happened all in extended hours, not during trading day. Right? Go back and look. Go back and look at the futures if you don't believe me. All of it. And that includes Friday close. Happened in extended hours, not during trading day. So that is market manipulation at its finest. So that's just something you guys need to consider. Okay? Basically, when I say need to consider maybe not holding trades over, because they will pull the rug on you overnight. And that's exactly what they did last week. Okay? If you'd like to follow me on Twitter, please do. I give more real-time tweets there during the trading day. And if you like the video, please give it a like, share, subscribe, or click to be notified when I release a next video. And with that, I'm Agent 00 Woe, signing off.